Hi, thank you for watching Digging to China. I'm Dong-Sheng. If you have not done so already, please subscribe to my channel. Thank you very much. On November 17th, China's central bank, the China Banking and Insurance Regulatory Commission, and the China Securities Regulatory Commission convened a meeting with the country's largest financial institutions. During this meeting, regulatory authorities announced a decision to establish a new key performance indicator (KPI) specifically related to real estate business for each financial institution. An urgent task was assigned to rescue real estate developers. Before attending the APEC summit in the United States, Xi Jinping approved measures to support the real estate market. This rescue initiative is not focused on stabilizing housing price, but on aiding real estate developers. Xi Jinping personally approved allocating 1 trillion yuan to rescue these developers. On November 17th, the People's Bank of China held a meeting with the commercial banks to discuss the allocation of this 1 trillion yuan. During the meeting, the emphasis was on targeted efforts to rescue a group of developers. The collapse of these developers could lead to a significant financial crisis for banks, triggering a widespread wave of financial crisis in China. Therefore, the immediate priority is not to stabilize housing prices or address issues related to relaxing property purchase restrictions, but rather to urgently rescue a group of the largest developers. During this meeting, a list of 50 real estate developers earmarked for priority rescue efforts was drafted. As reported by official Chinese media, this list is referred to as a whitelist containing the names of these developers. Subsequently, China's Ministry of Housing and Urban-Rural Development, aka MOHURD, also initiated the implementation of the rescue plan. The focus on rescuing real estate developers has gained momentum, becoming more specific in these details. MOHURD issued a significant news release on their website, explaining that the creation of this whitelist of 50 enterprises aims to mitigate the proliferation of risks in the real estate sector. However, they also cautioned that the rescue efforts for those 50 companies might not yield immediate results and could potentially encounter worsening issues, with the true impact possibly not being felt until next year. The underlying message from MOHURD is that even with the 1 trillion yuan allocated by Xi Jinping, there is uncertainty about fully resolving the issues raised by him. Therefore, MOHURD is preparing the ground in the public discourse. Let's delve into how the Chinese Communist Party is undertaking the rescue of 50 major real estate developers. Specific details have emerged through Chinese media reports. The People's Bank of China has officially outlined its decision on how to salvage these 50 major enterprises. In light of existing constraints, what measures are being implemented to encourage commercial banks to actively and confidently engage in the rescue efforts for developers? The central bank has outlined 3 essential points, so-called 3 not less than. Firstly, each bank must ensure that the growth rate of their real estate loans is not below the industry's average growth rate for real estate loans. This mandates an acceleration of lending to the real estate sector by these major commercial banks, irrespective of the reason. This serves as a non-negotiable requirement, with these banks leading in loan growth. This constitutes the first point, which must fall below a certain level. Secondly, the growth rate of loans to non-state-owned enterprise real estate developers should not be lower than the growth rate of real estate loans within the bank itself. This emphasizes the need to avoid discrimination against the private enterprises, considering that a significant portion of real estate developers are privately owned. The established practice prioritizing state-owned enterprises within banks is to be set aside in this case. Given that the majority of entities being rescued are private enterprises, this forms the second point, not to be less than. Thirdly, the growth rate of individual mortgage loans for customers of non-state-owned enterprise real estate developers should not be lower than the industry's average mortgage growth rate. To effectively rescue these real estate developers, it is essential to simultaneously support the customers purchasing properties from them. Discrimination against individual mortgage applications, especially those related to purchase from private developers, is strictly prohibited. Any prior discriminatory practice are no longer acceptable. This marks the third point, not less than. Hence, the introduction of these three not less than requirements has effectively removed certain constraints on China's major commercial banks in their efforts to rescue real estate enterprises. This signifies a relaxation of previous limitations and has sent significant ripples through the Chinese financial sector, underscoring the substantial impact of these measures. Why is the recent implementation of the three not less than requirements causing such astonishment in China's financial circles? It is crucial to recognize that not too long ago, Xi Jinping imposed the three red lines on banks, specifically aimed at restricting loans to real estate developed enterprises, a move that directly contributed to Evergrande's bankruptcy. The recent adoption of the three not less than requirements can be viewed as a direct response to these three red lines. Essentially, it not only nullifies Xi Jinping's constraints but also represents a departure in the opposite direction. Let's take a look at the three red lines outlined by Xi Jinping. On June 30, 2021, the People's Bank of China established three guidelines mandating banks to regularly report loan data for real estate developers. Additionally, real estate companies surpassing these three red lines are ineligible for loans and may face supply cutoffs. What exactly are these three red lines? The initial red line dictates that companies excluding advance payments with an asset liability ratio of approximately 70% or higher are ineligible for loans. As per the existing white list, the listed enterprises all exceed the specified asset liability ratio, rendering them non-compliant and thus ineligible for loans. The second red line prohibits loans to companies with a net debt ratio exceeding 100%. The third red line states that the companies with a cash short-term debt ratio less than 1 are uniformly ineligible for loans. The current set of three not less than requirements completely overturns and dismisses the three previously red lines, opening the door to unconditional loans. Under these three not less than criteria, there are no associated risks, restrictions, or concerns. The disclosed list of 50 real estate developers includes firms that have already faced debt default, such as Sunac China Holdings and the Country Garden. It also encompasses prominent property developers like Vanke, Shimao Group, and Longfor Properties. According to experts within the Chinese banking industry, the main reliance for rescuing real estate enterprises is placed on state-owned banks. These banks shoulder the primary responsibility with support from local small to medium-sized banks. Additionally, professionals from certain banks suggest that the banking sector has been actively involved in internal self-rescue measures. While the narrative may focus on saving real estate enterprises, the underlying goal is fundamentally about safeguarding the banks. The reasoning is that if real estate developers face a downturn, the banks would also be adversely affected. Therefore, the core of rescuing real estate developers ultimately equates to safeguarding the stability of the banking sector. Here are my takeaways. Firstly, there has been a fundamental change in the Chinese Communist Party's approach to addressing the real estate sector. While past efforts were centered around preventing a decline in housing prices, the CCP now acknowledges the impracticality of this goal and the failure of attempts to stabilize real estate prices. The current strategy has pivoted towards protecting the financial system, averting bankruptcies, and ensuring that the real estate bubble does not permeate the entire financial system, thus preventing a major financial crisis. Consequently, the current list of 50 whitelisted companies and efforts to rescue real estate developers essentially aim at securing the financial system. This significant development conveys a crucial message. The CCP has shifted focus from preserving housing prices to preventing the rupture of the real estate bubble, thereby mitigating the impact on the financial system. Hence, it can be asserted that China's financial crisis has initiated, albeit in its initial stages. Secondly, how is China addressing the rescue of the largest batch of real estate companies? The current 3 not less than measures reveal a strategy by the Chinese Communist Party reminiscent of its approach to handling the local government debt issues. This strategy is characterized by a passive approach, which can be described as a form of procrastination rather than a proactive solution. Essentially, it involves injecting funds first without immediate concern for their repayment, opting to delay any potential collapse. Consequently, the method employed to rescue major real estate companies is notably passive, prioritizing postponements over problem resolution. In the third aspect, the rescue of major real estate developers is essentially a self-preservation strategy aimed at safeguarding the financial system. However, they have also adopted a convenient policy narrative, emphasizing that private enterprises should not face discrimination within the 3 not less than measures. While it may appear as if Xi Jinping is showing concern for private enterprises during this rescue effort, the reality is quite hypocritical. A majority of China's leading real estate developers are private enterprises. If the goal is to save these private enterprises and delay the spread of the real estate crisis to the financial system, it becomes imperative to rescue these private enterprises. This is not a political favoritism or a genuine political shift. Rather, it seems to be a strategic move to present a positive image. Fourthly, the abrupt transition from the 3 red lines to 3 not less than measures underscores the Chinese Communist Party's remarkably limited capacity for economic governance, particularly under Xi Jinping's leadership. This issue goes beyond the incomplete nature of the 3 red lines. Many view Xi Jinping's policy reversal as not just incomplete, but fundamentally flawed from the outset. While an unfinished project may still have had a reasonable initial proposal or plan, Xi's policies from the 3 red lines to 3 not less than measures are perceived as irreparable mistakes that should never have been pursued. The shift reveals Xi Jinping's misguided approach to governing the country. And from 2021 to the present, public opinion on the real estate market in China has remained relatively stable. However, Xi's inconsistent stance has become increasingly apparent. In 2021, he resisted the bursting of the real estate bubble, but now he acknowledges this reality while attempting to rescue developers in a manner similar to rescuing local government debt, an approach that carries the potential for even greater crisis. In addition, the drafting of the white list by the Chinese Communist Party and the substantial investment to assist real estate enterprise surpassed the policy interventions implemented by the US government during the 2008 financial crisis. This further supports the notion that the ongoing real estate crisis in China has escalated into a full-fledged financial crisis, despite the absence of an official declaration by the Chinese Communist Party. The crisis is unmistakably underway. For those engaging in investments or financial planning of considerable magnitude in China, a comprehensive perspective is imperative. The issue transcends the real estate sector, representing a systemic challenge. China's economy is currently experiencing a period of turbulence, and this dynamic state of unrest is just beginning. 6. Xi Jinping's actions are likely to leave financial industry professionals astonished. By directly sidelining banks' risk control measures, regulatory authorities are taking the rein and instructing banks to lend. This regulatory move is a glaring example of what not to do, and it is genuinely amusing. Typically, banks formulate industry blacklists based on their macroeconomic assessment, steering clear of sectors with excess capacity and heightened risk. The bank's risk control units also delve into individual companies across various industries to pinpoint potential risks, creating an internal blacklist for those sectors. This list may evolve monthly as companies navigate occasional risks, and upon successfully weathering crisis, could be removed from the risk control blacklist. However, in China, the three major regulatory bodies are taking on an unprecedented role, prohibiting banks from even including real estate in their industry blacklist. They explicitly instruct the banks not to reject loans to real estate enterprises. Additionally, they aid banks in crafting a whitelist for lending, singling out 50 real estate companies. To oversee the implementation of bank loans to real estate firms, they introduced the three new assessment criteria, the three no less than. Notice the resemblance to the principles of a planned economy. Hence, I contend that Xi Jinping's strategy to salvage the market by deferring the crisis, allowing it to intensify, will inevitably serve as a cautionary example in textbooks. Thank you for watching. Please leave a comment and subscribe to my channel. Just click the subscribe button right here. I'll see you again shortly. Until then, be well.